Radio.
Demerara and Essequibo 99.1 FM.
Berbice 99.5 FM.
Kaieteur Radio.
Good evening, ladies and gentlemen. Welcome to another episode of Guyana's Oil and You. I am your hostess, senior journalist of Kaieteur News, and this evening we will be discussing Guyana's oil deal with ExxonMobil and its partners Hess Corporation and CNOOC Nexen. Now, I'm quite certain many of you would have heard that Guyana is poised to be the Dubai or Qatar of the region, and that billions of dollars in oil wealth will be coming our way. But is this really so? To help us answer this question this evening and discuss matters related to it are two distinguished guests. We have Mr. Tom Senzillo, the Director of Finance at the Institute for Energy Economics and Financial Analysis, which is based in the USA. And Senzillo also has an impressive 30 plus years of experience in the area of public and private finance. Welcome, sir. Mr. Senzillo, can you hear us? All right, we seem to be having some technical difficulties there. Until we resolve that, let me move on to the introduction of our next guest, who is no stranger to you by now. She is international lawyer, Ms. Melinda Janke. On the local scene, Ms. Janke is one of the most outspoken advocates for transparency and accountability in the oil industry. And in her fight for transparency, she has challenged the likes of ExxonMobil on every issue, ranging from climate change to its lopsided deal with Guyana. Ms. Janke, welcome once again to our program.
Thank you, Kiana. Thank you for having me back on the program.
Okay, so we'll just head over back to Mr. Senzillo. Sir, can you hear us?
Yes, I can.
Perfect. Thank you very much for participating in tonight's discussion.
Thank you for having me.
Great. So before we dive into the questions for tonight, I would just like to let our listeners know that if you'd like to send us a comment or if you'd like to pose a question to our panelists, you can feel free to do so by calling us on 226-7453 or 6222. I'll repeat those numbers again. You can call us on 226-7453, or you can send your questions via WhatsApp on 6222. So let's get into tonight's discussion. Mr. Senzillo, you recently published a very interesting report called Guyana's Oil Deal. Promise of quick cash will leave country shortchanged. Now, that report clearly strikes at the heart of the issue before us tonight. So my first question to you is, based on your findings in preparing this report, are we being sold a fantasy about the billions or trillions of dollars that would be coming our way from the oil wealth?
Well, in short, yes. Our organization, the Institute for Energy Economics and Financial Analysis, is an international energy and finance think tank, and we are involved in promoting new forms of energy all over the world, new forms of development that are reliable, profitable, and sustainable. And we see generally that the oil and gas sector, the more traditional forms of investment, are not where the markets are going in today's world, and that the Guyana investment is going in much the same direction. The government is hoping for additional revenues that would help them close their current budget deficits, that would help them spend on new things that are needed, new hospitals, new roads, maybe some more teachers, and then to put money away in what's called a sovereign wealth fund. And that's the three basic things that that the government has talked about achieving. And it is unlikely in the next 5 years that that it will be achieved. It's and so that's basically where our report came out, and what we have to say, and we tried to put some numbers on it, and then we can talk about that a little more.
Thank you very much for that. Ms. Janke, your contribution on this particular question.
I think that Mr. Sanzillo is absolutely right. In May 2018, I did a presentation saying that oil will make Guyana poorer, not richer. But I don't have the numbers. I didn't have the fiscal analysis. This analysis is absolutely rock solid, and it shows that Guyana is not going to get the money that people believe. We've been told that Guyana is going to get all these billions of dollars, and in fact, that is not the case. That's absolutely not true. I think it's really important people understand that there are no billions coming to Guyana, and the money that does come is not going to cover the things that people want to spend the money on. It's not there. It's not enough. It's not enough.
Okay. Now, moving on to my next question, which takes us into the numbers of the report at hand. We've heard a lot from the government, basically both sides of the divide, about the plans to use the oil money to improve infrastructure, improve healthcare, improve the education system with the money to come. But according to the findings of the institute that you're part of, Mr. Sanzillo, it doesn't seem as though this is actually possible. Now, could you paint us a picture of what the calculations look like in this regard and why it's critical for us to pay attention to this perspective?
Yeah, I think the best place to start really is to understand that the government is run, although it can sound very complicated, and it is in many ways, it's run like a household budget. Mm-hmm. If at the end of a month you have too many bills and you can't pay them all, you have to do an awful lot of juggling, and somebody gets shortchanged. In government, we call that a deficit. And they're looking to close the deficits that Guyana has. The second thing is in most households, there are needs that just often don't get met because of the having to balance too many expenses and not enough money. And so there's no room for vacations. There's no room for maybe even new clothes for the children and parents, and they have to put that off. That's new spending. And in government, that's what it's called, new spending. So the government of Guyana wants to close its deficits. The people need the people need a new set of clothes, if you will, and then like everybody else's household, you want to put something away for a rainy day. You want to it's called a sovereign wealth fund in government speak, but it's really the same three things that we would do in a household. So you would they're hoping to close the deficits. They're hoping to spend on some new needs, and then to put some money away for a rainy day. And they're not going to be able to generate enough money to do that. What we did is we took the contract between the government and the oil companies, Exxon, Hess, and China National Offshore Oil Company, and we subjected that to an analysis. I'm a finance expert, and I work with energy professionals, and we did this. It's been done. The same kind of analysis has been done before. And what you see in this instance is that during the first 3 years, the government is trying to close its deficits with the money and can't, because there's just not enough. And so they run up a $450 million deficit, and they have to borrow. So even though you're getting some money, you're not getting enough, and the country has to borrow to meet its needs. And that's not even new needs. That's just assuming that they try to put something away in the sovereign wealth fund. So you run up a $450 million deficit, and then in the next 2 years you're able to close the deficit but you're not able to spend on new things. By the end of the 5 years, depending on how you want to look at it, the country owes the oil companies $20 billion, and that's because the agreement says that Guyana must pay back reimburse the oil companies for the amount of money it takes them to get the oil out of the ground, the drilling and the background work and the studies and the transportation and the shipping and all of that. So you wind up having gone deeper in debt to get some more money. But nevertheless, even over the longer term, you're facing substantial new contract obligations, or you owe. It's like a credit card. You owe $20 billion on a credit card as well. That's at the end of the first 5 years. The basic problem here is when the project was being planned, most were looking at oil prices around the world of between $60 and $65 a barrel and going up. Right now, oil is at $40 a barrel, and it's unlikely between now and the next 5 years to go over $50 a barrel if it goes up that high. And so you could see just from the original planning that there is a insufficient amount of money per barrel to just to make back a good return for Guyana early on. And there are different contract provisions, which I could talk about, which make it even more difficult for the country to gain any revenues. But I could stop there for now if you have other questions.
Thank you very much. Ms. Janke, is there a contribution you'd like to make before we move to the next follow-up question?
I think I'd like to just mention the spending, because in that spending, Guyana has borrowed about $50 million from the World Bank. There are two different projects, one of 30 million, one of 20 million. So the oil is costing Guyana money. We borrowed 50 million in order to get ready for oil. And that seems to me to be a very strange thing to be doing. It's a huge amount of money. So there is this wild spending. I would also mention that project is illegal because it was done when there wasn't a finance minister in place. So I don't think that the Guyanese people should have to pay back that $50 million.
Thank you, Ms. Janke. So, Mr. Sanzillo, if I get what you said correctly, over the next 5 years, even though we would have some amount of oil money coming in, it would not be enough to cover our budget deficits while still allowing us to make healthy contributions to our sovereign wealth fund.
That's right, and spend on new needs that have been identified. In the budget statement this year, the minister identified a series of economic development investments and other kinds of expenditures that the government would like to make, and they feel they need to make in order to move the country forward. The oil revenue is as much for moving the country forward as it is for paying the back bills. And that's what they're looking to do. But the way the contract is structured doesn't allow for that flow of money to come to Guyana to meet those needs.
Thank you very much. Now, I'd like to move on to some of the provisions in the contract, which you were very much open to us discussing, and that has to do with the option that Guyana took to pay the corporate income tax for ExxonMobil and its other two partners on the block, Hess Corporation and CNOOC Nexen. Now, can you explain for our listeners what effect this is going to have on the profits that would eventually have to be split between the two, the state and the oil companies?
Yeah, well, what happened in the agreement as part of the incentive, let's say, to have the oil companies do the work here. They make money here in Guyana, and like any company that would make money, they owe income tax on those earnings, and that income tax comes in the form of more revenue to Guyana for its budget. As part of the enticement to have them come, the government said, "You will owe us this money, but we will pay for it. We're not waiving any tax provisions, but we will pay for it." And then that would come out of the profits that Guyana would have received. So when we calculated, it's about $650 million over the 5 years that the government should keep in its pocket, but instead is having to pay the taxes of the oil companies that owe the money.
So this money should have been paid separately by the oil company and not by Guyana.
Yeah, it's like if you when you go to work and you make a salary, and then at the end of the year you owe some money to the Guyanese government, or me, I would owe money to the United States government. It's as if someone came along to use a funny kind of a rich uncle to come along and say, "I'll pay your taxes for you." Well, that gets the money paid. But I didn't have to pay it, and the rich uncle is out the amount of the money. In this instance, it's the government of Guyana having their profits from the oil reduced in order to pay the obligation.
So this provision is definitely not to our advantage.
It's financially, if the provision wasn't there in the contract, the government of Guyana would receive $650 million more over the next 5 years. So that part of the arrangement doesn't benefit the government of Guyana financially.
Thank you very much, Ms. Janke. Your thoughts?
Well, of course, it's an outrageous provision. We have public servants in this country who earn very little, but they have to pay tax. They can barely make ends meet, but they're paying taxes. Now you have Exxon Mobil, CNOOC Nexen, and Hess Corporation. These companies, they're already taking a huge amount out of this deal, and they don't have to pay their tax. The government of Guyana is paying it on their behalf. But bear in mind that the revenue from the oil does not belong to the government of Guyana, because the oil doesn't belong to them. It belongs to the people of Guyana. So what they're really doing is cheating the nation out of income. That's a cheat. That money should come in and should be spent on the things that this country needs. Instead of flooding out people who are squatting, why after 5 decades can we not house everybody in a country that has 83,000 square miles? And the reason is these bad deals that are cut with people coming from overseas who say that they are investors. But this is not an investment. This is simply taking money out of the country. And it is outrageous that the government is going to move this money across and say, well, that's paying their taxes. Why do ordinary Guyanese have to pay taxes and these supposed investors don't have to pay any taxes?
Thank you very much, Ms. Janke. Now, the next provision I'd like to turn to, well, not a provision because it's absent from the contract. It's that of ring fencing. Now, Mr. Sanzillo, if you can explain for our listeners in simple terms, what's really a ring fencing provision and why is its absence in the production sharing agreement so critical? What's the effect of it?
Right. The way it figures into the contract is the government of Guyana has agreed to reimburse the oil and gas companies for 100% of the total development costs that it takes to identify where the oil is, the machinery together, extract it, and pull it out of the ground and process it and then ship it out. The way the payments are set up is the government of Guyana must reimburse to the oil companies it would be about $30 billion for the first 5 years. And that 30 billion has to be paid out first before Guyana starts to get a substantial amount of money, right? So the amount that they would get every year is reduced in order that the reimbursement is made to the oil companies for the $30 billion. So and what the ring fencing refers to, and it's a terrible term because it doesn't really explain anything, is that if the companies now discover additional oil like yellowtail or whatever, they can still charge the Payara or Lisa oil fields for that amount, so that there's no ring fence around Lisa and that. So you are winding up having to pay for all of the development from the oil that you're getting out of the ground. And so what that means is you will be paying a very long time for the total development costs before you receive much revenue. And the reason why the contract becomes such a problem is that I've also just said that the price of oil has gone down. Mm-hmm. Well, if the price of oil is up, you could pay off that 30 billion a little faster. But now you have a lower price of oil, and you have this just debt, but it's effectively a debt that you owe, and so you pay it back slower. That means the money coming into Guyana will be even further into the future. So beyond 5 years, it's not looking very good either. So the ring fencing is essentially allows them to just spend on the development costs wherever they want to spend, and Guyana has to pay it back before they receive a substantial return. So you get a little return, but because you have to pay back a certain amount every year, you get a lot less. If that provision wasn't there, you'd be receiving substantial amounts of money in the first few years.
Okay, Ms. Jangi, I'll allow you to make a comment on that.
Yeah, I think that's absolutely right. Usually you would have ring fencing. So if the oil company explores and there's a dry well, that's their cost, that's their loss. And that is separate. If they now find a productive well, that's a second thing, and you deal with that productive well. What the contract allows them to do is to go back and say, well, we spent all this money before, we want to get back all that money. Usually the answer is no, that's your loss. In this contract, the answer is, oh, okay, you can get back all that money. So again, it's another way of really taking money away from Guyana and the Guyanese people.
Thank you. Mr. Sanzillo, I'd like to just expand a bit on something that you said there. Now, you would have mentioned that the oil price market, it's really low at this point in time, and it therefore means that the period for recovering the costs shortens. So essentially, if the oil prices remain low in the next 5 years, which you've said is likely to happen, it definitely means that this picture of billions of dollars is actually a fallacy. Billions of dollars in wealth coming to Guyana is actually a fallacy.
Yes, and I believe that to be true. One of the ideas was that in like year 7, year 10, year 12, and 15, you would be receiving in the billions every year. Our review, I don't go past 5 years because I don't think it's responsible to do that, because the markets are in such difficult shape that I think I can honestly tell you what I think the price of oil will be and what the other variables are. Going out is very difficult to do, and I would like then, one of the things we say in the report is that it would be better if the government and the companies, if they put out a set of numbers that they consider to be, what they can agree on. And that would be better for public discussion than a group like me from the outside and all without, we don't have the authority of the government nor the legal obligation of the contractors. So it would be better for the government and all. That's why I cooked it into 5 years. But we do look at the longer term markets, and we can say that the outlook is negative for the oil and gas industry. And that means the prices are likely to stay low. It means that the worldwide competition is going to get more intense, and that'll mean more pressure, downward pressure on the prices. It also means, and this may be a bit of a shock to everyone, that that Exxon, who is the lead on the project, has become a less stable company than we all know it to be. I mean, it has a history of a long history of solid, stable profits and good development and all. And yet increasingly the company, like the rest of the industry, is getting much weaker. I'll give you an example. In 2007, the company was worth $527 billion. That's one of the largest companies in the world. Today it's worth about $140 billion. Now, that's not very large in the whole scheme of things. It's still a lot of money. But that is a much smaller company, and it is getting more difficult for them to get back that value. And so you have that going on. You have worldwide competition going on. You also have greater competition in the world in the energy sector from wind and solar energy, electric cars, on the automobile sector where they are involved. You have recycling in the plastics area, all sort of cutting away at the company's historic, profit centers. And so they're going to be in a lot, they'll be weaker and looking maybe to get out. I don't really know. I can't tell. But that's part of the reason why I didn't go before 5 years, because I can't tell. And if we were here 15 years ago, I would tell you that Exxon was going to be there and be stable. And they were a good partner to have, solid partner. I think here you have a much rougher road to go with them because of that. And then there's just a couple of more general points to be made. One is that the world economy doesn't use as much oil and gas as it used to in order to expand. I mean, one of the, for those of you listeners who may watch financial markets, the industry used to control about 29, we used to have 29% of the stock market. That's a lot of the stock market for, not the company, the industry, oil and gas industry. Today they have 2%. Now that's a substantial drop over a period of time. And that's simply because the rest of the economy is still growing. Stock market is still growing, but they are not. And they are not because the economy can do better with less energy. That hurts their profits, but it allows the rest of the economy to grow.
Thank you very much. On that note, we'll go to a quick commercial break, and when we return, we will get into more insightful discussions on Guyana's oil wealth and its contract with ExxonMobil and its partners.
The Guyana Elections Commission is advising all persons who registered and did not uplift their national identification card that they can uplift same from the GCOM registration office in their respective area from Monday to Friday between 8 to 12 hours and 13 to 16 hours. ID cards are only available for persons who registered before 2019 but never collected their ID card, persons who are older than 18 years and registered for the first time during the house-to-house registration 2019, persons who requested a replacement card because they lost their ID card, persons who requested a retake of ID photo, and persons who have had an ID card but requested change or corrections to their names or particulars. ID cards are not available for persons who already have an ID card and persons under the age of 18 years at the time of house-to-house registration 2019. Don't delay. Visit the nearest GCOM registration office to uplift your ID card today. For more information, contact GCOM on 225-0277, 223-9653, or email us at pro@gcom.org.gy, or visit GCOM's website at www.gcom.org.gy, or the nearest GCOM registration office.
Hi, I'm Alana,
Hi, I'm Casual,
and we want you to tune into the Morning Rush.
right here on 99.1 and 99.5, powered by Digicel.
Good evening, ladies and gentlemen. Welcome back to this special edition of Guyana's Oil and You. Tonight, we're discussing Guyana's oil wealth and the contract that it has with ExxonMobil and its partners. And the question before us is, we've heard so much about billions of dollars that's poised to come Guyana's way from its oil resources. But is this really so? Discussing this matter with us this evening is Tom Sanzillo, the Director of Finance at the Institute for Energy Economics and Financial Analysis, and international lawyer, Ms. Melinda Janke. So we would have wrapped up a discussion on the provisions in the contract that basically lead to significant revenue leakage. We've talked about the fact that Guyana has to pay the corporate income tax for ExxonMobil and its partners, and we've talked about the effects of not having a ring fencing provision in the production sharing agreement. Now, the next factor that I'd like us to discuss, it has to do with the production rate or the year rate of production. Now, Mr. Sanzillo, in your report, you would have said that ExxonMobil is expected, or it was expected, to produce and sell 31.8 million barrels of oil in 2020. But this was not fulfilled due to a number of issues such as the flaring and the effects of the COVID-19 pandemic. Now, if we can get into that just a bit for our listeners, how important is it for us to pay attention to what has happened in the first year with the rate of production and what that means for the income that's expected to come in?
Right. In the budget speech that the minister gave this year, a little late because of all the changes going on in the country, he pointed out that the price of oil was an issue. He also pointed out that the contract, the unspecified, he didn't really say a lot about what was wrong with it, but he acknowledged there were some problems with it. And the other thing that he pointed out was, I think it was 40 million they were supposed to do, and they produced 31, something like that. And that he expressed, concern that the production goals were not met. Now, there are many reasons that have been given. There is a first year ramp up that sort of normally occurs, and problems can occur. That was not given as the basic problems. The basic problems were some technological issues. The basic problem was flaring, which they were then asked to curtail production because flaring gas it runs contrary to the environmental laws in Guyana, and so there had to be a short-term curtailment. There were issues raised about the companies being able to bring employees in and out of the site because of the pandemic, and those were the major sort of reasons. Now you want to look at what's causing the problems in the beginning, and let me just tell you. When I said to you there should be a plan that's put out there, it's good that the amount of oil has been that Exxon has agreed, and I think it was Exxon, the partners have agreed, the oil partners have agreed with the government on how much volume was going to be produced, how much oil, because that then allows you to have this discussion. How well is the company doing? Are they keeping up with their schedules? You know, what can then the minister who's planning the budget for next year think about? How much revenues are going to come in, and is this contractor going to be living up to their agreement made with Guyana? So that even that little disclosure on how much volume is going to be produced is very important, because as we've sort of been talking all along, every barrel and every dollar has to be looked at in order to understand if the contract is producing the benefits that you're hoping for. And in an instance like we're facing, where the prices are lower, where we see troubles in the world market, where we see Exxon getting a little weaker, you have to pay strict attention to every dollar, or you're going to lose it. And an international company has far more resources to both mine to drill for the oil, and then to deal with the back and forth over the accounting rules. A big company can often outgun a small country like Guyana, and the contract is a document that is interpreted, and Exxon gets in there and interprets it according to its rules. And unless Guyana and the officials in Guyana are sharp and skilled and know the industry and understand the contract, they're in less of a position to protect the money that is coming. So as it's going to be less than the country needs, every dollar needs to be fought for.
Thank you very much for that contribution. Ms. Janke, I'll turn the floor over to you. What's your take on this?
I think the contract gives Exxon so much what we would call wriggle room, and the Guyana side so little information that it's really heavily in favor of a company that is actually an unreliable partner. Darren Woods told his shareholders at the beginning of this year that they got first oil. He said, ahead of schedule and under budget. And of course, from the point of view of Exxon and its shareholders, that's a great thing. They're getting the money faster and they're not spending as much. From the point of view of Guyana, it's been a disaster, because we have had to bear the cost of the flaring, and Kaieteur News has done a brilliant job exposing the damage to Guyana, the greenhouse gas emissions, the threats to health, and so on. That cost ended up with Guyana. My own view is that flaring is illegal, and I wrote to the EPA about it in August. So when we hear this story of how they're doing these things, actually, it sounds to me as if they're doing it really badly. Why are you putting in faulty equipment? Why have you got compressor problems? You're telling us on the one hand that you're a big oil company and you know how to do these things. And then on the other hand, the reality is that you're flaring billions of cubic feet of natural gas, which you're supposed to inject. You're not meeting your contractual obligations. So we have a huge problem. And that's before we even talk about all the different things that are in the contract, which Mr. Sanzillo just mentioned, about having to be clear where every dollar is coming from and making sure that we know. So this is a very, very bad arrangement for Guyana on every level.
Thank you very much, Ms. Janke. Back to you, Mr. Sanzillo. With everything that you would have examined in the production sharing agreement, what would you say alarms you the most? Mr. Sanzillo, are you still with us?
Sorry, I'm a little slow. That's a tough question, actually, for me to answer, because I'm a former government official who was involved with running the finances of the state and cities of New York for many years, and doing contracts like this, and defending the state when vendors come in, and with sometimes with very difficult things to accept, and you have to negotiate it out, and you have to discuss it. I think it's the basic premise of the contract that disturbs me the most, which is that there will be abundant revenue coming in from the oil and gas proceeds, and that it would appear that there's no risk to that. There is plenty of risk, and it is very disturbing. Let me give you an example. We are an international organization, and we work all over the world, and we were working in Norway for a number of years. And Norway is in one respect very much like Guyana, in that it depends on oil and gas proceeds for a substantial amount of its revenue and for its economy. And it's been in that situation since the 1970s. And it has built a sovereign wealth fund. It did have enough money to fund its needs. It did have enough money to spend new, and it did have enough money to build a rather big fund. That fund is $1 trillion today. It's one of the biggest in the world. It happened during the 1970s, 80s, 90s, and into the last few decades. The government of Norway in 2017 said that they will no longer be obtaining sufficient revenues to take care of their deficits, their new needs, and their sovereign wealth fund, and that is not temporary. Going forward, that will be true through 2060, 2060, so from 2015 or so to 2060. It's for the next 45 years. So that 45 years going forward looks nothing like the 45 years that they just came out of, where there was a different world market. And that's a country that knows probably as much as any company or country in the world, surely more than me, on oil and gas markets. And it has said that the future is not going to be lucrative, and they are betting the lives of their public and their economy. And so they're now using the time, now that they've been warned, to try to take that $1 trillion and what's going to be. It's not happening tomorrow. It's gradually producing some money with the oil and gas still, but it will be less. It will not be able to cover their budgets. It will not be able to cover their new needs. They need to build new areas of their economy, which they have been doing because they knew one day it would run out. They planned for that. It's a very interesting example of a government that thought ahead and didn't spend all the money. That's why this provision to try to put a little money away when you first start is very, very, very important. If you don't do that, imagine if the country was facing an imminent decline in their revenues and they had not put away that money, they would be in a panic, a financial panic. And so being financially careful in how you handle this money is very important. But the more important thing, and to answer your question more directly, is this view, the longer term view, is worrisome, because it's not going to produce what Norway saw 40 years ago. It's going to produce what I think, the way they're looking at it, which is revenues that are too small to cover your needs. That's what's got me very worried.
Thank you very much for that. Ms. Janke, I know that you would have been critical of several parts of the contract, so this question might be a bit tricky or difficult for you. But if you will, can you share your thoughts on what, in your view, is the most alarming aspect of the Exxon Guyana deal?
Well, I'm a lawyer, so of course I'm going to say It's the illegalities. It's the things that are simply inconsistent
Yes.
with national law. And I really want to stress here that we have very strong laws to protect the environment and to protect the Guyanese people going into the future. We have strong laws that say you mustn't pollute, strong laws that actually you mentioned intergenerational. We mentioned the future, that's intergenerational equity. We have laws that protect that. And one of the things that alarms me is the World Bank project, which is essentially aimed at dismantling the environmental protection laws in Guyana. And the World Bank has been going around saying, oh, the laws are complex. Oh, the laws are out of date. The laws are not complex. They're very simple. The laws are not out of date. We put climate change and greenhouse gases, the impact of greenhouse gases in there in 1996. I know that because I wrote that section myself. This is what the World Bank wants to dismantle. And they are going to do, they want to do that, and we have to stop it. They want to change the laws to make the flaring legal. The flaring right now, in my opinion, is illegal. The World Bank wants to change that. So they're pro oil and gas at a time when the entire world is saying that we have to stop greenhouse gas emissions because it's a threat to life on Earth. Even when we talk about the money, and you mentioned the putting aside money for the Sovereign Wealth Trust Fund, we don't have a legal Sovereign Wealth Trust Fund. The Act was not passed in accordance with the Constitution, so it's not a valid law. David Granger was not president when he assented to the bill, and you have to be president in order for that bill to become law. So this thing is riddled with illegality, and that, I think, as a lawyer, that really, really concerns me. And I would make an urgent plea to your listeners and viewers to use the laws that are there to protect Guyana from this sort of deal, from these illegalities, and from the attempts by the World Bank and the IDB to dismantle the protection that we've got already.
Thank you very much for that. Mr. Sansel, I'd like to go back to a comment that you made. You said Norway, which is one of the few successful countries with oil and gas, it has basically said, the future of oil and gas is not as lucrative as it used to be, and now it's going towards diversification. And we've seen globally that there's this movement towards alternative sources of energy, and that movement is steadily increasing. Where do you see this leaving Guyana that has now entered the oil and gas industry with billions of barrels of oil equivalent resources? And what would you say Guyana should really take in mind when we look at where Norway is going? What's the message that it's sending to the global industry?
Sorry, I was on mute. The situations are different, but in the broadest sense, they're really not. There is an alternative choice to be made here. I think what the message from there is that broadening your economy is a safe way to move forward. And that Guyana does have strengths in its existing economy before the oil was discovered, and it needs to build on those and look to build on those in a systematic kind of way. I would say nothing is going to equal the oil and gas promises, but the oil and gas promises are probably not real. So it would be better to do economic development choices that are steady, stable, modest growth over a longer period of time than this promise of a lot of money, quick cash, and then it not materialize, and you have bet the diversified economy on it. You want to build on things that well, and that you wish to that you wish to grow with. And so the message, and then I guess the message from Norway is, they will continue with their oil and gas for a while, although they are getting out of it as best they can, and they're going to try to manage it very prudently. But the way that they're managing it very prudently is by being very careful with what they do have remaining, and to make sure that they're watching, the amounts of money that is left to them, and they're being careful about that.
Thank you very much for that contribution, Mr. Sanzillo. We'll go to our final commercial break, and we will return to wrap up this evening's discussion.
Relax and turn up your radio for Heartbeats with DJ Viper every Thursday night from 21 hours to 22 hours 30, giving you only the best mix of Indian love music. Heartbeats only on Kaieteur Radio.
Good evening again, ladies and gentlemen. Welcome to another episode of Guyana's Oil and You. And if you're now catching us, we're wrapping up tonight's discussion with Tom Sanzillo, the Director of Finance at the Institute of Energy Economics and Financial Analysis. And we also have with us the international lawyer, Miss Melinda Janke, who's usually a guest with us to discuss some really important matters in the oil industry. To wrap up tonight's program, I'd just like to have the closing remarks of both of our guests on your advice for the government and the people of Guyana on its oil industry. Mr. Sanzillo, I'll start with you.
Okay. Well, I think implied in what I've put out thus far is that the government has a contract. It's a contract that has a lot of pitfalls to it, and so it needs to take care of the situation with very careful monitoring. I was gratified to see the minister's comments in the budget acknowledging that there are low price problems, that there are problems of meeting production targets, there are problems with the contract. Those acknowledgments need to be followed by some actions to remedy that part of the situation. I think you need more reporting to the public from both the oil companies and the government, so that no surprises come. The people will agree. They always want you to succeed in government. They don't like it when you fail. But they kind of understand if you only sort of muddle through. What they don't like and should never accept is not being told the truth. So there needs to be a lot more disclosure here, because it is a problem. Guyana, we made some suggestions about the Guyanese budget process that we think needs to be improved. Since the publication of the report, Melinda has successfully gotten the courts to agree to some permit changes, which would make the review of the environmental permits every 5 years. That's actually a very important financial matter as well, since it is a good idea for the country to reconsider its, when you're monitoring something carefully, you should have certain benchmarks to take stock of and to reconsider. So I think that's a very positive thing. And we're going to see what kind of responses we get, and we'll probably be commenting again in detail on some other aspects of the deal, and maybe have some further recommendations.
Thank you very much, Mr. Sanzillo. Ms. Janke, your closing remarks?
Yes, thanks. Thanks very much, Kiana. I mean, I agree with everything that Tom said, and I particularly like the when he said, tell the truth, because people have been sold a false dream, false promises of wealth that are not there. And I think it's very important to also to acknowledge the fact that Vice President Jagdeo has already 2 years ago he warned about this rosy picture. And he gave a speech at the Georgetown Chambers of Commerce and Industry, their annual awards and the dinner gala. And he said, this rosy picture, it's not going to happen in that time frame of 2020 to 2025. So he's already said this. The Vice President and I don't always agree on everything, but on this point, I think I give him full credit for warning people 2 years ago that this rosy picture does not exist. The question is, what do we do? And we have to be very realistic about where we are. I think the other thing I would say is, in addition to telling people the truth, is that we have to make sure that the oil companies and the government obey the law. And that's really the thing that I would say as a lawyer is critical to any sector, but particularly to an oil sector, which has such a bad reputation of not wanting to accept regulation. So tell the people the truth about this oil deal and make the oil companies and the government obey the laws of Guyana.
Thank you very much, Ms. Janke. And once again, thank you to both of our guests, Mr. Sanzillo, Ms. Janke. This has been an insightful discussion, and I do hope that we can have you back again sometime in the future. To our listeners, thank you for being part of tonight's discussion. I hope that you would have been able to take away a lot of important perspectives, and we hope that you can join us again next week, Thursday, same time, same place, for more discussions about Guyana's oil industry. Once again, thank you again to our panelists, and we hope that you do have a good evening.
Thank you very much, Kiana.
No problem. Good night.
Good night.
Thank you.